There is absolutely a sentiment out there of maybe it's not a first mover advantage, maybe it's a first mover disadvantage.
Hello ladies and gentlemen, and welcome to another episode of the PWM Tea Break. I'm Ali Al-Nazi, and as always I'm here with my co-host Yuri Bender. This week we're delighted to have Phil Watson join us. Phil is an ex-Citi Private Bank Head of Innovation, now Chief Investment Officer for the Betteredge Capital Family Office, and founder of the Lightbox Wealth Technology Consultancy. Phil, I got to start by asking, please enlighten us. What choice of beverage have you gone for?
It's my usual, I'm afraid. It's the tried and tested English breakfast tea with cold milk.
The classic. Yuri?
Well, because Phil was coming in, I was trying to culturally adjust and into the mentality of the tech bros.
Yeah.
So I actually went for coffee because we've got this internal consultancy on our floor, and they're always there clutching their mugs of coffee when they're standing up for their breakout sessions. So I've gone for that choice today with the coffee, Phil. When I look at the concerns of these communities, one is very much AI and integrating AI into your work culture and your processes. And we've had a very interesting piece about this by Martin Johnson, Chief Transformation Officer at Moultries. And what Martin's writing about, this trend of the rise of AI complacency at wealth management groups, where the creative instincts of the advisors are being dulled by excessive reliance on AI and automation. Is that a sentiment you're familiar with, Phil?
There is this paradox of, the speed at which technology is evolving and the pace at which humans are realistically and reasonably able to adapt in this type of world. And, there is absolutely a sentiment out there of maybe it's not a first mover advantage, maybe it's a first mover disadvantage. Maybe I just ought to wait to see what the progress is with AI, and then we'll learn from those that have done well, and we'll also learn from those that haven't done well, and we'll then opine on our strategy. So in many ways, it's not as illogical as it sounds. The second point is that, in terms of control and governance, AI itself isn't just a technology. It's actually something that needs to be embedded. There needs to be a process around it. You're still accountable, as you forever were, to the regulators. You're still accountable to your shareholders. And many companies quite rightfully want to make sure that they're moving, but they're moving not perhaps at the pace of the technology, but just at that pace to demonstrate that things work, and when they work, they deliver results. So, again, trying to be balanced here, there are some sort of corporate, very sensible rationale as to why the speed is moving as it is. I think the last point, though, is, and I continue to see this, is really comprehension. So we've talked about complacency, I've talked about control. I think comprehension of what AI can do for you, what it actually means. I mean, everything seems to be being bucketed today under AI. Many things I would call maths, and several things I would call technology processes, but many of those are not AI as it is currently interpreted.
Interesting points there, Phil. And we also have a piece from Dave Shastri, CEO of TrustEdge, who describes how the evolution of the family office involves a transition away from reliance on private banks for operational infrastructure, especially in the US market. Is this a scenario you recognize in the family offices you work with?
Family offices, they're agile organizations. They are a cost, and expense rationalization remains as important as ever. They're looking for flexibility. They're looking for modularization, forever seeking to improve the lives of their end clients. So, technology is evolving, and there have been several entrants that are not banks that are performing in functions that help a family office to be simpler, to be smarter, to be safer. And those companies have really not only been transformative into the family office that they're serving, but so much so that the banks themselves have begun to adopt them and adapt their workflows to incorporate them as well. So you've got the combo of both in the bank usage as well as in the family office. On the other hand, family offices do value the bank. They do value the relationship at the banks. That human touch is exceptionally important. It's not just the screen which serves you up data that you can slice and dice in every way that you like. It's about the human relationship, and it's navigating, consultation, being a little bit more, let's say, exchanging views.
There's also the idea of technology as an investment theme. And we had quite a nice article by Didier Dure, ex-ABN AMRO, private banking investment boss, and he's writing about the use of thorium, one of these rare metal elements to help a more efficient creation of nuclear energy. And this type of use of clean energy and the melding of the energy and the technology, is that the sort of theme that some of your clients will be interested in?
I think try to incorporate values and purpose as well as financial returns here into this answer, because family offices do diverge considerably around where they seek and where they go to for opportunities. It isn't only a question of what they seek, but also the access that they have as well in certain cases, Yuri. So it's not. I can't answer this as a sort of as a single cohort because I do see considerable differences. I participate in a number of surveys in family offices, and I see myself firsthand how different family offices are looking at different areas of the energy transition. Some family in the technology world, for example. Let's just take AI, which is a very prevalent theme now. Everybody is looking at AI, but in what capacity? Well, some of them are looking at it through the hardware lens, some of them are looking at it through the software lens, some of them are looking at it through the LLM lens, some of them are looking at the LLM infrastructure lens. Some of them are looking at the full stack, lens. And then you get ones that are very, very specific in terms of an area that they're interested in.
And the same with clean energy.
The same with clean energy. So it goes from broad all the way down to extremely focused.
And Ali, you've been looking at some of these broad asset allocation trends among family offices. Which patterns have you detected?
Well, we have this interesting report from Citi Private Bank analysing trading patterns from 350 family offices, and they're describing a significant increase in deal activity with growth, equity and early stage investments, the most popular targets. And yet again, it's AI, energy and healthcare, the most popular themes. Phil, do you agree that these larger families are prepared to sacrifice some liquidity in pursuit of these tech returns, even during times of uncertainty?
Just to reflect on my own career. And at the very beginning, when I was helping to analyse and advise ultra-high net worth individuals, it was really not common to see alternatives as a very large part of the portfolio. I mean, a typical amount would have been somewhere between 5 and 10%, and a lot of that would have been real estate as well. As the growth of the private equity industry emerged, and VC, and nowadays private credit and hedge funds, of course, you start adding it all up, and it can be easily 45-50% of a portfolio. I think the Citi study shows that as well. But there have been other studies as well recently that have all put the amount at roughly just under a half. So that's a considerable amount of, as you called it, illiquidity. So I think there is an appetite, and there has been an appetite, is really the point, for illiquidity. And I think family offices as a sort of, let's call it a patient cohort, can withstand market cycles and absolutely see through those in order to extract what they think is, a good long-term bet.
And you've been looking at asset allocation trends, speaking to a variety of investors and commentators. What have you seen?
I'm seeing a real bifurcation, to tell the truth, Ali. There are those who are very much keeping their faith with the US model, the tech-heavy allocations in the firms in Silicon Valley and other places, and there are the cohort who are getting worried about allocations to the US, who see attacks on the rule of law from the White House, the big institutions, whether it's the World Trade Organization, NATO, the United Nations, and they're thinking long term, is this the kind of system we can work with? And I was in Kyiv very recently in Ukraine, and there's a sense there, there's a lot of investors gathering there, there's political advisors, there's historians gathering there, and they're looking towards a much more coherent and powerful Europe, and they're saying the solution to this war, to this conflict at the center of the continent, has to come from Europe. And what happens in Ukraine, the technology that's used, the drones, all of the political sentiments will actually define the future of the European project as well. And Phil, if we do have this clash of opinions, this clash of civilizations almost between Europe and the US, this increasing division, which side would you find yourself on?
I think, taking a historical context on this, we've seen these stories emerging before, which are typically presented as, we're either going to go that way or we're going to go that way. And invariably in my lifetime, it's actually not been either. It's been something in the middle. So if I think back to the earliest part of my career and the Asian financial crisis, would Asia turn inwards or would it be westernized? You know, and what's really happened there was something in the middle. They became more global, but put a lot of layers, control layers in, stronger institutions locally in Asia. I think about Japan, similar story. And then in recent time, we've had, COVID. Were we all going to stay at home? Or were we going to, was air travel and so forth going to be even more than before? See, we always have this temptation as a human, say we're going to go that way or we're going to go that way. But in the end, most of the time, we go right down the middle. Resilience seems to be a feature of our time, and I don't see that changing. I think every board will have dusted off their disaster recovery / emerging risks sheet, and they will have, in their own words, have interpreted the geopolitical situation. And
absolutely.
Yeah.
And those themes of resilience and adaptability of the private banks and family offices, Ali, we're going to be discussing all of those at our forthcoming Global Wealth Management Summit.
Yeah, that's right. We have the Global Wealth Management Summit coming up on the 5th of November. Now, in its 8th year, the summit is FT Live and PWM's flagship gathering of private banks, family offices and wealth managers across 2 days. And hopefully, Phil, we'll be seeing you there at the event. And thank you so much for joining us today.
Absolute pleasure. It's been delightful. Looking forward to attending your event.
Fantastic.